Welcome to the honeystocks.com halftime report. Most of you will already know that I like to give market analysis and stock analysis halfway through the week, just so that you can get an idea of what's going on in the market and perhaps some stocks that should be on your radar for the next few days. Now, before I get going, just need you to quickly take a read of that for the next 10 seconds. Just basically means that you're responsible for any positions that you take. I accept zero responsibility. Blah blah blah. So, who is this halftime report for? So, I'm not a day trader, guys. I work with a time horizon that works within weeks to months if it's a good trend. I would class myself as a trend stroke swing trader, and it's a very logical, very successful style of trading, which you're going to see in just a couple of minutes. So it's not for day trading, okay? But who it is for is if you find yourself, doing the Ronaldo, maybe if you're learning from losses, maybe you feel like you're, pushing a rock up a hill, maybe you're learning from YouTube. This is going to help you in some way. I know that because I've done hundreds of these now. So if this is the first time that you've watched me or you've been exposed to what I do, I'm Sam, and I run a very successful trading education company. I don't believe in get-rich-quick schemes. I don't believe in signal services. I think it's all crap. So what I'm going to do is just walk you through my style with some charts. You're going to see exactly what it's all about. And if you are somebody that struggles, then you can stick around for a couple of minutes at the end. This will last maybe 15 minutes maximum, but you can stick around for a couple of minutes at the end if you are somebody that struggles. So rather than me just blether on, as they say in Scotland, let's just get started and let's dive into some charts. Now, the first couple of charts that I want to just walk you through are really about the overall market, okay? I want to just spend a couple of minutes talking about the overall market, where we are at the moment, and then I've got about 10 individual stocks that you should be looking at. So first up, we have the Dow. Now, we can see with the Dow that we're obviously approaching key areas of resistance. Now, we've had a rejection here. So I've been getting a lot of messages, emails, social media, comments, etc., asking me what my thoughts are, whether or not we should be looking to short the market or not. I personally am not shorting the market at the moment. I'm just managing my current positions a little bit tighter. But we do have to be mindful here, guys, because what we know is when we have the major indices approach these key levels and we have rejections, all that means quite simply is the individual components within the sector or the index will decline as well. It doesn't matter how strong you think your stock is. If you've bought the best stock on the planet, it's still going to decline. So you need to be mindful of that. So if you're looking to take new positions in the market, you need to be using a lot of caution at the moment, and that's for the Dow. The next one up is tech. Now, this is a triple Q, and as we can see, tech is very similar. We are approaching key area of resistance. If tech moves through this level, then we can look to be buyers of tech stocks. Therefore, we should be looking to identify the strength within the sector. That is really the common sense and logical approach. I'm not somebody that likes to go hunting for bottoms. I understand that it's price that pays, and I don't want to catch any falling knives. I don't want to wait 2 years until I move into profit. I want to get profit now. And by having an understanding of the overall indices, it does certainly aid decision making. This is the S&P 500. Just to echo the Dow and tech, quite clearly we can see, guys, that we're just hovering around resistance at the moment. If we break through this, the stock market takes another leg higher, and we can look to be buyers in the market. So those are the three major indices. Now, there are obviously there's so much more to it than what I'm presenting to you. I understand that my charts are incredibly clean. That's because I believe in a concept that's called chart art. I don't like to overcomplicate my charts. I don't believe in having 100 indicators. I think it's pointless. So certainly you need to bear in mind what's happening with the overall market. The major concern that I have at the moment, however, is this chart. And this is for the Russell 2000. Now, for those of you that might not know, the Russell 2000 is a basket of around 2,000 small cap stocks. And what we've seen here, quite simply, we've got a rejection at a key level in the market again. So what that essentially means, it doesn't mean that all 2,000 stocks are declining, but it means that quite a lot of them are declining. And when you talk about a couple of thousand stocks in the stock market declining, that's not great news. That's just common sense. So we need to be mindful of what's going on in the overall market. The small caps are not a great place to be at the moment. Fingers crossed, this is just a momentary drop in the market and we can continue to the upside, because quite frankly I do like to take buy positions in the market. As you can see here, when we broke down below this level, I was shorting the market, my clients were shorting the market, lots of money is made shorting the market, but you need to know what you're doing. And certainly the Russell 2000 is a big component of the market as well. So with that said, I just want to dive into around 10 stocks for you now, okay? First up, we have, well, actually it's an ETF for palladium. So when we have declines in the market, we know that the money managers, the hedge funds, they all have to still hit their targets. So what you'll tend to find with the market is when the stock market starts to decline, you'll actually find that other areas of the market start to advance, and palladium's an excellent example of this. Quite a lot of my clients have been doing very well on palladium over the last few months. I think that the trend really speaks for itself. But for those of you that are perhaps eyeing up palladium, which I think the ticker is PALL, I think if you set an alert for 150, I think that would be the logical next entry into the market. Or indeed, if we get quite a substantial pullback, as we can see has happened over the last few months, then that might well offer further entry into palladium. So Twilio, the cloud stocks on Monday taking an absolute dive off a cliff. But what we are observing is pullback opportunity. It's not all about just identifying stocks that are breaking out and moving beyond lines. We need to understand the natural movement of price, and certainly with Twilio at the moment, we've pulled back. Quite a substantial pullback. This was a chart that I posted to my clients at $100 when we broke out here. Obviously a huge move to the upside. A lot of my clients have done very well on this stock, but this pullback has stopped quite a lot of them out. But now, certainly with the trend that we're seeing, it is still intact. So we're now looking for pullback opportunity. So Twilio is one that I think we should be considering. Next up, we have SPLK, very similar to Twilio. We're looking for a pullback opportunity. You might not know, but we had earnings on SPLK just a few days ago. And what quite often happens with earnings, and this is the biggest amateur mistake that I see out there, is a lot of traders like to jump in on stocks before earnings, maybe a couple of days beforehand. It's absolutely the craziest thing to do. It took me a number of years before I realized this, but this is the perfect example of what you should be looking to do with earnings. You simply just wait and see what happens, and then you look to take advantage, because SPLK, by all accounts, beat all metrics in their earnings report. Wall Street has done what Wall Street likes to do, which is just tank the stock to stop everybody out, to get your shares at a cheaper price, and then they will absolutely hoover these shares up once support is found. So SPLK, provided the overall market plays ball with us, might well be a decent little pullback opportunity for you there. Okta earnings is coming up tomorrow, I believe. So certainly it's not one that you should be looking to move in on at the moment. Certainly wait and see what happens with earnings, but I do like the fact that we've found support here. We've got multiple areas of support in close proximity. So certainly that this may well be one to consider on the back of good earnings, and perhaps a move above $85 might be appealing. Next up, we've got Microsoft. Very, very straightforward here, guys. A move above 115 would be the catalyst for entry here. That would be a decent breakout, and hopefully we can start to see that move towards 120, 130. PayPal, next one. This is a stock that I've done incredibly well on last year. But certainly we're now approaching the significant hurdle of $100. So any of you that are out there that are in PayPal, might be an idea to start thinking about blocking in your profit, and certainly with a view to entering again if you get that breakout above $100. Next up we have Roku. Incredible move recently. A lot of my clients got in on this failed breakdown here. Huge move to the upside, which is lovely. I didn't take the trade, which I hugely regret. But certainly that this is moving beautifully. Again, very similar to PayPal. Think about tightening up your stop loss. And if you're looking for a new entry into Roku, then I think it would make sense that you perhaps wait for $80 to clear. I think the breakout area is about 78. 78 to 80 would be the entry zone. Next up, we've got MasterCard. Again, similar. We're looking for a move above 230 here. I think that would represent a clean breakout. So certainly with MasterCard, it's one that you should certainly set an alert for. Now, we also have Planet Fitness here. Now, Planet Fitness has held up incredibly well over the last few months. Even in the face of a declining stock market, Planet Fitness just kept on going. It wasn't massively adversely affected. The trend, it was obviously still bullish, although we did have a couple of big pullbacks. It started to recover now. My guys got an alert in here, and obviously it started to move. I would like to see a bit of a pullback to perhaps retest this area of support before taking a new entry into the market for Planet Fitness. But it's certainly one of those that I think you should be considering. I think it's one that's demonstrated strength, and I see no reason why it wouldn't continue to demonstrate strength, provided, and this is the caveat to every single chart that I've talked about today, it's totally dependent on what happens with the overall market. I cannot stress this enough. If the market starts to decline massively, don't go diving into taking lots of buy positions into the market unless you're taking an investing mindset and you have the mental capability to withstand watching your sort of capital diminish. So that's certainly up to you and how you like to play the stock market. You're maybe watching this and thinking to yourself, what the hell is this? Who the hell is this guy? As I said before, my name's Sam and I run honeystocks.com. Super popular website, blog, all things stock market related. And I essentially teach people how to trade the stock market. So if you're somebody that is out there that's struggling at the moment and perhaps you want to see better consistency, maybe you want to align yourself with, I suppose, a group, with a company that has a track record, etc. That's all published on the website. And just aside from that, I'm just somebody that really understands how to teach people. I'm currently working from Mexico City at the moment, so in between my trading, I also like to kind of jet about the world. I'm in Mexico City at the moment. That's the view that I've got, literally just outside the window, which is lovely. And if you go into my website, I publish every single trade that I post into my client group for complete transparency. It's all registered on my website. I get asked quite a lot if I take in every single one of these trades, and the short answer to that is absolutely not. At any one time, I will only have anywhere between 5 to 10 open positions, and quite simply, when the stock market was moving last year, there's only so many positions that your capital will allow for. So feel free to check that out. It's on the website. And I also understand what the journey for most traders is, because most of the time, especially with beginners, or maybe if you're somebody that's kind of hunting around social media, it might even be why you're watching this. The normal process is for you to spend a couple of years going through YouTube videos, reading those books. But obviously the worst of it is learning from those losses. I don't know how many of you maybe take positions into the market and you get stopped out of almost immediately, but then you get frustrated because the stock does exactly what you expected it to do in the first place. I don't know how often that happens to you, but I know that it used to happen to me quite a lot until I learned exactly how to do it. And it's frustrating because ultimately what you'll end up doing is just saying that to the market. And that's the worst of it, because the stock market doesn't have to be complicated. I don't know how many of you like to watch Cramer, or you're maybe watching Bloomberg, CNBC, and you have all these guys making it seem incredibly complex, when the reality is, when you watch perhaps somebody like me that's maybe presenting to you right now and showing you just how it can be done, that's the way trading should be. It shouldn't be complex, because it doesn't need to be complex. Is there more to it than what I'm presenting to you in the charts? Absolutely there is. I obviously can't give away everything that I do, but certainly with the charts that I'm showing you today, they're all legit. They're all stocks that you can add to your watch list. You can set price alerts, but you obviously need to know when the optimal entry is, and what makes an optimal entry. And that's half the battle. So, I mean, if this has resonated with you in some way, at honeystocks.com, we genuinely believe in delivering results. We've got clients across 16 countries now, all the way from LA to New York to London, to all over Europe, to Hong Kong, to Australia. And it's really just an incredible place. And everybody that is part of the group has been educated by me, and it's just a really cool place to be, and incredibly successful traders. So with that said, if you want to I suppose explore the possibility of working with me, being part of the group that I have, etc., it's very, very straightforward, guys. All you need to do is jump onto honeystocks.com, click apply, choose a time, tell us what you struggle with, and then we'll have a chat. It really is that simple. Any chat that I have with anybody generally lasts anywhere between 20 to 30 minutes. So it's not super intense. Hopefully you can get from this this presentation that I'm just incredibly chill and very informal. So if you want to have a chat with us, and you want to improve your results, and you want to learn a specific style of technical analysis, etc., go on the website and honestly just click a time, and we'll have a quick chat. And it couldn't be any simpler, really. So I think where we are. I'm on the time zone of most of the US and Canada at the moment, because I'm down in Mexico. A lot of the time I spend my time usually between the UK and Vancouver, Canada. I've been in the UK for the last 6 months, and I know that the time difference hasn't aligned with many of you that want to talk to me, because the calendar was obviously reduced for you guys. But I have literally opened up my full calendar for the next 3 days. So for anybody that wants to register and have a chat with us, then you've got the possibility to do that now. So I look forward to talking to you. And as always, from the bottom of my heart, thank you very much for watching.